When you see GEX options and CME charts listed on the Coinwise dashboard, here's a foundation to begin understanding the data. In simple terms, gamma is an options metric of how quickly the sensitivity of an option price changes as the asset price changes. Gamma exposure, or GEX, measures the overall option market maker's exposure to gamma. This can have a strong influence on price movements, and we'll have a video on this topic very soon. But first, let's understand options basics. Options are flexible trading tools used by investors for speculation on price movements, reducing capital requirements, generating income, and managing portfolio risk across stocks, indexes, commodities, futures, and even crypto markets like Bitcoin. An option is a contract that gives the buyer the right, but not the obligation, to buy or sell an asset at a predetermined price called the strike before a certain date, the expiration. The strike price is the predetermined price where the option can be exercised. Every contract has an expiration date. Expiration is simply the date when the contract ends. When purchasing an option, you pay a fee called a premium to secure this right. Two parties participate in every option trade. The option buyer pays a premium and in return receives the right set forth in the contract to either buy or sell the underlying asset. And the option seller, the party who collects a premium and in exchange accepts obligations of the contract. There are two types of options: calls and puts. Call options, or calls, give the buyer the right to buy an asset. Traders typically buy calls when they expect prices to rise. Put options, or puts, give the buyer the right to sell an asset. Puts are often used when traders expect prices to fall or want to hedge existing investments. Options also have what traders call moneyness. If price is trading above a specific strike price for a call or below a certain strike for a put, the option already has value and is in the money or ITM. If the strike is near current price, the option is at the money or ATM. And if a price is trading below a strike for a call or above a strike for a put, the option currently has no intrinsic value and is out of the money or OTM. Let's look at an example. You're watching a stock that's trading at $180 and your analysis suggests it's shifting momentum. You think prices will go up and decide to buy a call with a strike price at the money or $180 with a premium of $200. Your option gains value if the stock moves above $180. So if it rises to $200, you still have the right to buy at $180. Your potential profit would be $20 per share, and since an option contract typically controls 100 shares, your profit would be $2,000 minus the $200 premium you paid for the option, leaving you with a potential profit of $1,800. Or you could sell that option before the expiration date and collect the profits. Although many options can't be exercised until expiration, you don't actually have to exercise your option to be able to profit from it. Traders can sell options contracts they've purchased, but this can carry a risk known as assignment. If you sold your option and the buyer decides to exercise the option, you're obligated to fulfill it. That means that regardless of where price is trading, you must buy to fulfill the option contract. Based on a trader's bias and strategy, they'll select options that satisfy their needs. A common preference of intraday traders are options with same-day expiration, also known as zero-day options. These are extremely popular for speculating and trading low time-frame price movements. There are also options with weekly expirations, monthly expirations, or quarterly expirations, as well as long-dated contracts known as leaps. Options provide traders with flexibility, leverage, and risk management opportunities in markets like Bitcoin, SPX, stocks, and ETFs. Developing your options knowledge gives you a strong foundation for getting started with both trading options and with understanding how the options market influences price movements. This is the practical baseline for understanding options data on the Coinwise dashboard. For deeper ways to combine options data with gamma exposure, market structure, settlement, gaps, volume, and time-based levels, sign up to unlock Coinwise education courses across Foundations, Beginner, Intermediate, and Pro, and Trading Journal, so you can apply these concepts with greater precision.